Hi guys, welcome to Clubec 9. This is our day 7 for the beginners class. So guys, after watching this video, then that simply means that we have already filled up all the missing days, right? Okay, so as I always say, I always encourage you guys to ask questions in case there's not something you don't understand. You see, let me tell you something. The game of trading is very challenging, so you need to pay a lot of attention so that you don't miss anything, and you always want to go back to watch or to learn some of the things that are not really clear. See, with cryptocurrency you can make a lot of money, but if you're not careful, if you don't put yourself on ground to learn, then you will find out that you keep thinking that you have not learned enough to make money. Do you understand? But I can assure you that what you need here is just consistency. Be very optimistic and follow it back to back. After this beginners class, I will teach you guys strategies that will be mind-blowing, that will give you guys good profits. Okay? And believe me, there are a lot of opportunities in the crypto space, a lot of it. And that's why you're here, so that you can harness those opportunities to change the narrative. In this case, you're earning in dollars. So irrespective of what happened to the Nigerian economy, it concerns you, but it will not affect you as much as you want to be, you want to take care of your basic needs, and also things that you deserve, right? If you work hard, then you also deserve to enjoy your money, right? Okay, see, this is the space where you can convert $100, trade it all the way $10,000. Yes, it's very possible. This is the space where you brought small money, small capital, and you are going with big capital. Understand the game, understand the strategy, understand the idea, go with the ideology. Don't come with the so-called get rich quick ideas, and I can assure you that you're good to go, right? Okay, so today we are actually treating something that is very vital: spot trading versus futures trading. These two guys are the bedrock of trading, making money in the crypto space. The first one we started with was spot trading, where you buy low and sell high. Most times when you buy low, you end up losing. When you buy low, it continues to go deeper. Don't forget, when we started, I said we should buy a particular coin, and that coin, we're going to be buying the coin every day. That's the plan. We're going to be buying this coin every blessed day, every day. Now, if we had bought the coin, just buy, by now we'll still be at loss, and I'm very sure that the coin will still going to continue to dip. And I can say that today is a red day today. Though Friday, Saturday, Sunday, they were good days, but rough days are still coming. So as the rough days are there, make sure that you don't stop buying your crypto coins. Make sure you don't stop buying. But if you stop buying, then that simply means that you won't make a lot of money from this. This is the opportunity for you. Let's go. Now for spot trading, let's come to Bybit. Okay, so on Bybit, if you look at it, even here it's been written already. Spots, can you see? Derivative. So futures trading comprises of margin trading, options, okay, then derivatives. Those are the three types of futures trading, but the one we are doing here is derivatives. Okay, derivative, that's what we're doing in futures. So in case, don't get it twisted, they're all the same. Now on the chart, if we come to the chart, okay, the idea is that what everybody wants is to buy any of your crypto coin. You want to buy at this price. You see, you want to buy at, let's say 130. right? You want to buy at 130, and at 130 you want to ensure that from that price it grows all the way like that. Can you see that? Yep. You want to ensure that it grows all the way. You understand? It goes like this. This is what you want all the time. But it doesn't happen like this all the time. Now, what you need to do now is that for you to be able to get this opportunity like this, make sure you don't buy, you have $100 and you just bought maybe Solana $100 and that's all. You don't want that to happen. What you want, for example, the coin we bought, okay, which is JUP, right? Look at the coin. Apparently, I think I would probably check. I don't know the price that I bought mine, but I know that I bought it at a very good price, right? Since I bought the coin has been on an uptrend, but I'm not moved by that. Okay, I am not moved by that. What I want is for the coin to drop all the way. So if the coin was dropping, I'll be happy, right? But if the coin is pumping, I won't be happy, right? Because I just bought it. I still need it to dip. Let it dip. When it dips, when it has already bought all the days for me, then I want it to pump. That is what we call dollar cost average in spots. Beautiful, sweet, easy. I can tell you, within 6 months, I know how much you can make with this. So let's quickly check some of the major things in spots, comparing spots to futures. Okay, but at least you understand what future is. Buy low, sell high. Simple, very easy. Okay, now understanding the difference between spots and futures trading is crucial for choosing the right trading approach, because as it is trading, you can trade spots, you can invest in spots, right? You can trade futures, but you cannot invest in futures. You can find your way around it, but the risk is way too high as far as I'm concerned. So spot involves buy low, sell high. And some of the key features is that when you buy in spots, you also have ownership. Apart from the fact that you want to make profit, you also have ownership of that particular asset. But in futures, you don't have ownership of the particular asset. You are buying a contract. It's a contract that is binding you and the exchange. Okay. Then for spots, irrespective of entry can be anything. Entry can be anything. For spot, entry can be anywhere, and it doesn't really matter. And when you place an entry, it doesn't expire. It doesn't have expiring date. You understand? And as you are holding the asset, you're not being charged. You don't pay any money for spots. For futures, you'll be paying fees. It's called funding fee, right? For spots, no leverage. You don't need to borrow money. Leverage is simply borrowing money from the exchange. Yeah, but for futures, you borrow money, you leverage. That's why you can earn a lot of money from futures. But from spots, the returns is very low, except you are investing huge amount of money. That's it. That's the idea behind spots. So the those are the part of the benefits. So the pros, we're going to be checking the pros and cons of it, right? It's very simple. Very simple. Simplicity. Okay, it has low risk. Then ownership, I talked about that the other time. Ownership. Okay, you also own part of the asset. Then the cons. low potential returns. Then it requires large capital. To make huge profits. Okay, so that's just it. And for sports is actually good for beginners. That is the best way for beginners to start trading. Then investors looking to hold for long term, they can do that through sports. Yes. So if you're also a trader that preferred low risk, it is better you go for futures. As a trader, if you prefer low risk, just go for sports. Okay. Then let's come into futures. So futures it involves contract to buy or sell a cryptocurrency at a predetermined price. Yes. On a specific future date or time, whichever we want to put it. These contracts can be traded on the exchange, practically. So that is for futures. So that's the definition. I've been like, we can either buy or sell. Okay, it's a contract. It's not, you don't have ownership of the asset you're buying. Some of the key features is leverage. So leverage helps you to borrow money from the exchange, depending on either 1x, 5x, 10x. Okay, then let's say 50x or 100x. So apparently you can use any in between all these. I just gave them just few lists. Okay, then after the leverage, after you have leverage, your capital also determines your leverage. So anything you have leveraged or any leverage you have selected, then let's assume that your capital is let's say $100. Okay, so leverage, your capital times the leverage, that will be your total balance. So if you have $100 and you leverage 5x, that's $500. If you leverage 10x, that's $1,000. That's the amount you will have to trade with. But don't forget that you also need a margin. I think when we go on the platform, I will show you that. So we also have margin. Okay, margin is the total amount you want to trade. You want to trade with out of your $100, which is your capital. Okay, so out of $100, if you trade with $10, this is your margin. Okay, $10 will be your margin, right? And then $10 will be the one that will determine your profits and your loss. Okay, so that's it. Then we have edging. Edge. I've talked about leverage, we talked about edging. Now for edging, you can open two positions simultaneously. So let's assume you're buying BTC. You can open buy. You can also open sell at the same time. So if you do this, it simply means you have edged. Okay, you have edged the trade. Then for futures, trades usually have expiring dates. But the futures that we are trading, which is derivatives, it has funding fee. So instead of having expiring dates, there's funding fee instead of that. So that's it. So let's look at the pros and cons for it. it has higher potential returns. Returns. Because you leverage, you understand? So the returns is usually very, very high. Then it is very flexible. Now, in terms of the flexibility, you can make profit from both sides, either high or low, either on a high. So, as I said, the flexibility part of this is just the fact that with sport, you can only make money in one direction: buy low, sell high. One-edged sword, but with features, it is a two-edged sword. You understand? The sword is has two edge, right? Definitely, it simply means that you can buy, make profit, you can sell, make profit. But in sports, you can only buy when you make profit. When the coin sells, you don't make profit. So that's it. You lose money in that. That's the flexibility. I think I've talked about edging, right? Okay. So let's talk about the cons. Then higher risk. Is very, very risky because of the leverage. Okay, so if you have $100 and you leverage 50x, that's $500, right? You see that 500, that if you don't take margin of $10, the $90 becomes like your collateral. So when you're trading, if you lose $90, all your money is gone because your collateral is no longer available. That's why. Then we have complexity. Yes, very complex. For sports, it's just buy low, sell high, right? But for futures, oh my, if you buy, well, if you predict that the market will go up, market can come down. If you predict the market will come down, market might go up. So you need to be sure. You need to do analysis. You need to learn. You need to understand fundamentals, technical analysis, all those things, for you to know that yes, this is exactly how to make profits, and that's where the money is. For most of us, we don't have a lot of money to invest in crypto to make substantial good profit. But in futures, you don't need a lot of money to make big money. That's the idea. Okay? Yep. That's the complexity. Then margin calls. Margin, as I said earlier, margin determines your profit. The more margin you take, the more the profit you get. And it's usually very advisable that when you're trading, don't use more than 10% of your margin, of your capital rather. If you have $100, don't use more than $10. If you have $1,000, don't use more than $100, unless you are willing to pathway with that money. If you are willing to pathway with that money, then you can take higher risk. Okay, you can take higher risk. Apart from that, it's not advisable. Okay. So I think that's the last one on the for the cons. Now the question is, who is it best for? Okay, it's best for experienced traders with strong understanding of the market mechanism. Experience is very important. Yes. So because this part of this lesson is to know that, okay, how do you know which one is best for you? It's better to be experienced. Then number two, looking to leverage their positions. So as a now, you don't have a lot of money, right? Then you know that you need a lot of money, and you want to borrow money to trade, right? So don't worry, the exchange will borrow you money. That's the leverage. And if that's what you want, then that's good for you. So you can just say number two, it will be leverage. So if you understand leverage, then you can also become a futures trader. So another thing is, if you understand hedging very well, you can make money when market is going up. You can also make money when market is going down. You can place trades simultaneously on both end. And on this, it's just taking advantage of the volatility. So edging too is there. If you understand edging very well, then you can decide to say you want to start futures trading. Okay, so let's quickly look into the what's it called, Bybit. Let's look into this place. So we have this is the interface, then we have derivative, which is this. We have spots. So let's go and check spots. Now for spot trading, so you can select your coin from here. Okay, select your coins, then you can search for any coin you want to trade, any of the coin whatsoever you want to trade. Search from here. So if you decide to trade Dodge, this is the Dodge, right? So if you want to buy instantly, you click on market order. If you want to buy at a particular price, you click on limit order. So you put the price at which you want to buy. Okay, then quantity, how many do you want to buy? So you can put it in USDT. You can say you want to buy $50 or 500 or 5,000. It depends on you. Or you could either say you use this what's it called, this gauge, to drag how much you would like to buy. Okay, but this is where you check your balance from here. That's the balance. Then after you've already purchased, then if you come to your assets, come to spots, then the coin must be on this list. The coin you have bought must be on this list. So take note of that. So that's for spots. This is how you buy any coin of your choice. Okay, so there are different categories of coins you want to buy, but if you don't know the category of the coin, not as much as you search, it will pop up. So that's how to buy on spot. Then for futures, which requires you to understand how to trade, how to analyze the market, so as to know when to buy and when to sell. So this place is for your leverage. Okay, this for your leverage. You can adjust it. So for this particular coin, the highest leverage will be 75x, because there are different types of coins, and all the different types of coins, different leverage is attached to them. So that's the way it works. So that's how to select your leverage. Then if you want to trade on cross or isolated, you click on this place. Now cross is, you're using leverage, right? Now if you want to use let's say part of, normally your margin is part of your capital that you're using to trade. If you want to use the remaining capital as your collateral, then you use cross. If you don't want that, okay, if anything happened to this trade, you only want to lose your margin, you don't want to lose your entire capital, then you go for isolated. So it helps you isolate your capital and expose only your margin to the market. If anything happens, your margin is gone. Okay, so that's it. Then you can also do market order here by either limits or market price. So market price is buying at the current price, limit is buying at a specific price. Then this is where you see your balance. Okay, I think I've talked about that before. So as I don't have balance, if I click on this plus, I'll be able to fund my account. Then the next one will be, this is your USDT. Okay, so I usually advise, as for me, I will prefer order by cost, or we also have others which is by quantity of the particular coin, or by the value, which is based on your leverage. This guy is calculated based on your leverage. Okay, then after you've already input the amount you want to trade, then you click either buy, or it's called long or short. Okay, long or short. Then you will see the position of the trade, the trade details here. So let's quickly check that on the on the demo trade. So demo trading. So it's also advisable that if you are new, it's better you start with demo trading. Don't go and do more than yourself. So I usually recommend 20x. Okay, so you want to enter a trade, click here, then order by costs, and put the amount there. Out of $100, we are assuming that we have $100. Out of $100, we are entering $10. Then place your trade. Boom. Okay, so when we get to understanding the exchange in general, then we'll now begin to talk about all these features in full. Then I'll also ensure that you guys also, lay your hands on some of these settings so that you can know how to go about them. Okay, so I think for this day 7, that will be all for this day 7. I'll be explaining more things to you guys. So we still have a lot of days to go, but we have all our classes intact. So that's just the way it is. Then I will see you guys shortly. That will be day 8. So bye for now, and I'll see you in the other class.